Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed right here on the Nasdaq stock market. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. And just with under an hour to go until U.S. markets close, the Nasdaq-100 is trading lower along with the broader market, but Shawn Cruz, manager of trader services at TD Ameritrade, the NDX has been a relative outperformer in what's been a choppy market.
It has been, and so it's pulling back to underperforming slightly today. But if you look at where we're at for the year, it's still quite impressive with all the volatility and some of the swings that we've seen. It's only down about 5% on the year. We were actually able to get into positive territory for the year last week. So even though it's down a little bit more than the other indices today, it's still, I'd say, having significant outperformance for the year overall.
All right, moving along to our next slide here, taking a look at the volatility index, seems as if we've got a little bit more of that back into the markets.
It was, and I had this sense that it felt like things may have gotten a little ahead of themselves when we had the VIX down into the mid-30s just earlier on last week. Just didn't feel like we had enough clarity on a lot of things that I feel we would need to before we can get a sustained pullback in the VIX, which to me would indicate that we've had a resolution and plenty of fronts. We certainly have had improvement on quite a few things, but I don't think we were anywhere near a resolution to a lot of the issues that are overhanging the market. So I wasn't surprised to see the VIX move higher towards the end of the week. And then, as we got off to the start of this week, you certainly saw a little bit of a pop higher. And then on today's price action with some of the indices back, trading back lower, and some pretty strong pullbacks, and it's pretty much completely across the board. And it's not surprising to see that we're up towards that 50 level once again. It'll be interesting to see if we remain below 50 or if we do break above. So I feel like if we do break above 50, that would indicate there is serious fear that has re-entered this market.
Right, and really the big story of the week has been crude oil. I mean, these are historical levels that we're looking at, and we can see this in the next couple of charts here.
Yeah, the real just crazy thing about energy was just the amount of oversupply. And so, there's 5 years here on this chart that we're sort of showing. But if you're looking at that, the bright blue line is the one that you sort of need to take note of it. And if you look at that, we are more oversupplied right now than we have been at any given point in the past 5 years. So that's sort of what the backdrop for what can cause these massive moves lower. But now there's two things that go into that number of day supply. There's one, the actual demand on any given day, and then also the amount of supply that's expected to come onto the market. And we still haven't gotten a very good indication that there's going to be relief on either front. You still haven't had any sort of an indication that we are going to turn around from a demand standpoint, which to me would mean you're going to reopen a lot of these economies. And I don't just mean reopen it slightly. You're going to start to see back online. You're going to start seeing just sort of leisure type travel return to the population. I just don't see us getting there, at least in the near term. So you're not getting any sort of an increase in demand. And then on the supply front, you've had some positioning and some discussions around actually cutting the supply and maybe doing that as more of a mandated standpoint. We've heard that from the Texas Railroad Association, who has had that brought up at a meeting with a lot of these energy companies, and they decided right now they still don't want to do that. So there's still a lot of supply coming on the market, and there's not enough demand to sort of eat that up. So it's not impossible to imagine that this actually we could get even more oversupply just if you're doing it by how many days of supply do we have on hand. I think you can still go higher yet in that.
All right, Shawn, to wrap up here, 16 Nasdaq-100 companies reporting earnings this week. There's talk out there that the second quarter is sort of a throwaway quarter. I don't think throwaway is necessarily the right term. I think what corporate management is saying really is going to be a focus, even in terms of connotation, what they're saying, how they're approaching unprecedented times in the market. Forward guidance, of course, if they're able to provide it. Analysts and traders are going to be hanging on to every word. What will you be looking for?
Yeah, so one thing to note is if you're looking at the expected moves here for some of these names, we get Netflix this evening. Netflix is expected to move 11%, Biogen 9%. Intel isn't expected to move as much, around 6%. And then you have American Airlines at 11%. And what I think is interesting about these companies in the Nasdaq-100, but they're also, I think, a very diverse set of companies to look at. So you get a read through on the consumer, you get a read through from one of the medical companies, a chip maker, and then one of the airlines. So I think actually everyone is going to be keenly focused on American Airline this week to see what the impact is of their business, and more importantly, what their outlook is. And then Netflix tonight, I think, sort of the big secular play that's going on right now, and that is how much demand, what are they seeing in terms of subscriptions now that everyone's more or less staying hunkered down inside? Are they getting a lot more new subscribers? How's that actually translating to their business? So there's some very interesting earnings reports coming out this week, and I expect that to be something that we benefit from in the weeks to come. And that is, we start out just looking at the big banks, but we get a better read through on all the other sectors here in the coming weeks. Coca-Cola came out and already mentioned that they only have had that impact sort of in the last 2 weeks. But what they've done, and I've heard other companies do, is they've actually focused in and said, here's how we did January and February, and then here's how their performance was in March. And that's interesting for two reasons. One, it's just interesting that the companies are sort of breaking out their quarter now between the good part of the quarter when things were still relatively open, and then the bad part that last month, March, when we sort of shut everything down. But what I think that does for a lot of analysts and a lot of market watchers is we can start to get an idea of what we can expect from a performance standpoint over the next coming months. And they're saying, really, if you want to look for some idea of how their business is going to be impacted here in the second quarter, maybe look at some of the numbers that they're reporting for March in terms of revenue and earnings, because I think breaking out March and kind of saying how their business changed can be something that's pretty helpful to markets as they try and get an idea of what they can expect for an impact to be, and that'll help them price things better as well.
All right, Shawn, great stuff as always. Thanks so much for joining us.
Thanks.
All right, thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.